I was the chief financial officer of 3 companies. 2 of them were listed on the stock exchange. There I learned all about the world of fundraising and M&A. And at the end of 2010, I had a midlife crisis and burned out and tried to launch a wine business.
David Horne, an old friend of mine from a while back, who has now re-entered my life because of what we're doing here at Vested and the FounderMetrics podcasts.
I had been speaking at an event in Reading, and after my talk, a woman came up to me and asked why so little funding went to female founders. And I looked at her and I said, I have no idea, but I'll find out. About a week later, I was in a meeting with the chief executive of the British Business Bank, and she smiled and reached down to the bottom drawer of her desk and brought out a bound research report called UK VC and Female Founders. And they looked at every VC deal in the UK in 2017 and found that less than a penny of every pound went to all female teams. Let's keep going. Let's keep moving forward. I no longer need to worry about the past. There's no shame in it. There's pride in it from what I've learned. And there's great knowledge. It's a database for me, but I don't have to spend my time worrying about the past anymore. I'm now focused on the now and the future.
Welcome to FounderMetrics by Vested, the podcast that delves deep into the anatomy of business triumphs and the strategies behind the commercial success. I'm your host, Ifty Nasir, founder and CEO of Vested, and I'm so excited to take you on a journey into a world of inspiring founders. Hello, and welcome to FounderMetrics. My name's Ifty Nasir. And I'm the host, and today we've got David Horne, an old friend of mine from a while back, who has now re-entered my life because of what we're doing here at Vested and the FounderMetrics podcasts. So David, do you want to just give us a quick background on yourself and your accountancy start to life?
Absolutely. So, I trained as a chartered accountant with PwC in Vancouver, in Canada, where I'm from. And when I qualified in 1987, I got a job offer, and my wife and I moved from Vancouver to Zurich, Switzerland. We got on board an airplane with one-way tickets and a 2-year employment contract. And in June, that will have been 38 years ago.
Don't you miss Canada?
We go back every summer for a holiday. Don't want to live there, but we go back there every summer for a holiday.
Well, once the world has changed a little bit, it might be even better for you to be there.
Absolutely. Well, yeah, we'll see. I mean, we go back. We have very dear friends. We have family, and we see them every year. But I first came to London when I was 12, and I fell in love with London. And I think London's the coolest city on the planet. And my business is in London. I have clients all over, but I'm based in London. And what better place to be?
It's difficult to be, especially in the summer.
Yeah.
Anyway, let's move on from your Canadian roots and then the Swiss adventure.
Absolutely.
When we first met, you were helping loads of startups or early stage businesses fundraising.
That is correct.
And the one that we particularly met up on was Alchemia.
Correct.
How many that whole switch from being an accountant into being a CFO and a fundraising CFO? Particularly, do you want to tell us how that came to pass?
Yeah, so I left the accounting profession. So I stayed with PwC for 2 years in Zurich, and then I was offered an incredible job by my biggest client, and I became the number 2 finance guy for the Swiss subsidiary of a big U.S. computer hardware manufacturer. I was 27 years old, and this company in Switzerland had turnover of $500 million.
Whoa.
So that was pretty heady. And you learn to grow up really fast there. And, talk about fake it till you make it. But at least I had audited the company for a couple of years. I knew what I was walking into. So that was kind of my first experience. And then we moved to the UK in 93 and stayed with big corporates. My big corporate career ended up at the BBC, where I spent 3 years as the head of business and finance for a division within the BBC Resources, which is all of the facilities side, studios, outside broadcasting, post-production, all of that stuff. So I learned a lot about media production, which was really cool. Financially, I was far too adventurous for the BBC. It was a very conservative organization. But yeah, no, wonderful time. My mum was probably prouder than anyone else. Well, my son works for the BBC,
Well, it's something certainly to be proud of. So kudos to you.
Thank you.
But tell me, so moving on, I mean, a lot of the stuff that we do on FounderMetrics is around founders. So
yes.
Having been a CFO,
yep.
you decided to follow a journey of being an entrepreneur as well.
I did. So I had a 10-year period after leaving the Beeb where I was the chief financial officer of 3 companies. 2 of them were listed on the stock exchange. And there I learned all about the world of fundraising and M&A. And at the end of 2010, I had a midlife crisis and burned out and tried to launch a wine business, which was...
Tell me more about that, because I mean, I'd read about that. I think it was last week in the Telegraph, wasn't it?
It was in the Telegraph last week. Yes, it was.
So £100,000.
£100,000 on a little wine business.
Wine business. Tell us more.
Yeah. So, I mean... I left the company. I was pissed off. We had a new chief executive and he and I were like chalk and cheese, just didn't get on. I stuck around for a year and then I thought this isn't going to work and I left. And I had been talking with my family about, I want to do something that I'm passionate about. And I talked to lots of people and did a lot of introspection, and it boiled down to I wanted to do either something in music or in wine. And my 2 then teenage daughters said, "Dad, you're too old for the music business, but wine would be perfect." So I went to night school at the Wine and Spirit Education Trust down in Bermondsey. And I did their level 2 and level 3 programs. It was hard. Level 2 was easy.
Loads of wine tasting.
Loads of wine tasting, but
hard,
also a lot of theory and understanding about how grapes are grown and all of that kind of stuff. So it was fascinating, and I was learning, and I was in a job that I hated, and then this was night school that made it all worth it again. And then I left the company and launched out on my own. And I got a couple of quick wins, which were nice. And then I realized that actually selling's quite difficult, and I've never done it before. And people know me as a chief financial officer, not as someone trying to flog them wine. And it got really hard. And I tried hard for 3 months. And I had set myself, so it started in October, and I'd set myself a goal of a certain number of clients to reach by Christmas, and I missed it by a mile. And then I tried a little less hard, and then I just went into denial and just carried on living, spending money the way we did when I'd been a chief financial officer, and we happened to have money in the bank, and it just started to fall down, and yeah.
Well, I guess that's interesting. I mean, that is a founder story.
It is.
But at what stage did you realise that either the problem that you were trying to solve wasn't a problem that you were best placed to solve, or that this thing just wasn't going to work?
Both of them, I came to the realization around the Christmas time after I missed my first target. Yeah, great question. And that was the scary thing, because the accountant in me worked out what was the gross profit on a case of wine, and it wasn't worth the effort of selling it.
Yeah.
Just the emotional effort. And
I mean, you hear a lot of great stories about people, buying a few crates or whatever, and then 10xing or even 100xing.
Yep.
But that wasn't
that wasn't the case.
Easier said than done.
No, easier said than done. I mean, I still run the wine business today. It's a hobby. It's completely a hobby. I mean, I drink all the profits. And I've got, in all honesty, I've got 2 main clients. One is me, and one is a very dear friend who's a retired city gentleman. And he buys rather serious wines, which I supply for him from time to time.
Well, so long as it's the side hustle rather than the main job, because I guess you managed to get yourself back on track.
I did.
And I think it's that we'd like to really focus on.
Of course.
Let's start off with this philosophy that you've got around business metrics yourself, and that's FACE. So tell us more about FACE before we go.
So FACE stands for Fund, Acquire, Consolidate, Exit, and it's written in detail in my book, Add Then Multiply. So FACE is basically what I took mainly from my learning in that 10-year period where I was the CFO of those 3 companies. Because we acquired 15 private companies, took over another AIM-listed company under takeover panel rules and all that, raised £100 million, and I was there at the sharp end inside the company doing the doing.
You raised £100 million?
Yes. Yeah, not in one go, in 5 or 6 goes, but yes.
But that's quite an achievement.
Yes. Yeah. And since leaving and doing what I do now, which I do exclusively with entrepreneurs and SME businesses, I'm up to about 115. So I've raised another 15 million in the last probably 6 years. It's easier to raise big numbers when you're on a stock exchange.
Yes, I'm sure it is. And it's a very, very different story when you're in an entrepreneurial environment. Which I guess my own journey has taught me as well. But the business that you've set up, this whole notion of add, then multiply.
Yes.
You set that up when?
The company's been trading in its current form since 2014. I originally had the kind of concept of what I do back in 2002, when for a period of nearly a year I was self-employed and did consulting work, and called the business. The precursor to the current title was Add Then Multiply, but that was when the business was created. But doing what I do now, I've been doing for so we're 2025, I've been doing for 10 years.
But what was the problem that you were looking to solve here? Because, I mean, there's so many accountancy, finance books, there's all sorts.
Exactly.
What was the problem that you were looking to solve? How did you
something that those accountancy books don't address.
Go on then.
So I sat down and I've met a lot of entrepreneurs, and I work with people who know a lot of entrepreneurs, and I did, some conversations with these people to get a feel, so that it wasn't just this is what's in my head in terms of understanding the marketplace. And then I took what's in my head and said, right, there is demand within the world of entrepreneurial businesses. There is a subset that have the right capabilities and qualities to be able to grow exponentially.
How do you identify them?
Anyone could, but there are also choices that must be made to achieve it. How do I identify? I go out and I speak to people. I have conversations. We've just launched something called the Funding Fitness Index. It's on our Add Then Multiply website. And that gives you a 20-page customized report, lets you book in a 20-minute one-to-one call with me. Then we can discuss it further. But any entrepreneurial business can achieve it. What they've got to be willing to accept is that they won't own 100% of the company.
Yeah.
That there will be other people on the board who are going to, depending on the size of the investments, there will come a time where not only do you not own 100% of your company, you aren't even the majority owner. Mm-hmm. And there's a psychology that you need to get used to there. And there's all the legal stuff and all of that kind of framework of things. And because
let's just pick up on that one before we move forward. That whole thing about that psychology of moving from being a majority owner, if not the whole owner, to potentially minority or because that is a big.
It's a big difference. It's a
big
difference.
Something that I think about every now and again as well. But tell me how you firstly help people through that change in mentality.
Well, the way I often pitch it to them is to think about a pie.
Yeah.
And right now you own 100% of this pie, and you're going to grow your business, and I can set out an example, but you're going to grow your business so that the pie is this big, and let's say you own 40% of it. 40% of this is a lot more than 100% of this.
Indeed.
Vested is the leading sharetech platform. What does that mean? It means we make funding rounds a dream, so you can raise with ease. Our platform helps founders secure investment, scale fast, and succeed. Because companies that raise smart grow strong. So take the stress out of funding rounds and raise with confidence. For more info, search Vested.
Without the second need.
We use the same philosophy when we talk about Vested, when we talk about giving shares to your team or those who help you build the business. There's not many founders who can grow a business all by themselves. It's actually down to everybody else who's part of it, and therefore
absolutely
everybody who is part of it should have a piece, have skin in the game.
Well,
what you're talking about is a little bit different. It's that, or what I'm trying to tap into is that change in mentality from being the majority to the minorities, going from 50.01% to
49.9.
Exactly. That's the bit I'm trying, and that change in mindset.
Yeah, so if you're going to be doing that, you have to be very, very trustful of the people who are stepping in. So, and typically when you're at that stage,
Yeah.
so most venture capital firms won't take a controlling stake. They don't want it. It's not within their mandate. But when you've scaled to a point where you're starting to look at private equity, most private equity houses want to take control so that they can force the changes through. And there, the work that I do with founders is really coaching them on understanding why these people are coming in and making the recommendations and changes. And I can completely understand how a founder feels like that. And one of my favorite links to do with that, one of my favorite musicians is Neil Young. And Neil Young has a very grungy song. And one of the lines goes, "That's why we don't want to be good. We don't listen to the record company man. He'd try to change us and ruin our band." And I say, look, you've got to, this is the equivalent of the record company man, but these people, they are professionals in this industry. They know how to run and scale and grow businesses. This is what they do. They are single focused on how do we maximize the return for our investors and of course ourselves.
That's the
so you need to, but that's the game. And so if you're willing to do that, I know a guy who sold a quarter of his company to a private equity business, ran it with them for 4 years, learned more than he'd learned about business in the previous 30 years. Yeah. And he sold 75% of his company up front. He then sold the final 25% of his company for 3 times more than he sold the 75% for.
Yeah, and I guess that's the scaling story. So tell me, you said that you've helped people raise 15 million over the last few years.
Yep.
Has that all been through angels, through VCs, through Ps? You mentioned each of them.
Mainly through angels, and some high net worth individuals that weren't quite family offices, but if they wanted to have a family office, they could.
So which of those have you found the most challenging from an entrepreneur's perspective, and how did you decide, or how did you gauge? I guess the quantum is the starting point.
The quantum is absolutely the starting point. The quantum is absolutely the starting point.
How did you help the founders select the right
Well,
investor?
we then go through and look at the different types of investment that are available, and again, that's set out in detail in my book. In fact, in both my books, I'll just hold up my other book for a second, Funded Female Founders, and we'll come on to that. But in both of the books, it sets out these are the different types of funding that are available, and we look at debt funding, and then we look at crowdfunding, and then we look at friends and family. Venture capital, private equity, family offices. Yeah. Even in this book, even talking about, how do you do an IPO? Obviously not in detail. You can't do that.
That's a very slim book for an IPO.
Yeah, exactly.
Journey. But you set up the business, and the book came after. But as you were setting up Add Then Multiply, what were the things that you were looking at when you talked about the problem that you're looking to solve? How did you know that you'd actually addressed it appropriately and then decided to scale your own business?
When I had a couple of high-profile people in the entrepreneurial network who are well recognized. Let's just leave it at that. We don't need to name drop. And a couple of them became clients of mine because they saw what was in the book and liked it.
And at what stage was that? I mean, because part of what we're trying to do in FounderMetrics is help founders, get away from the generic KPIs, etc., and try and get to the heartfelt aspects, the feeling in your gut as to where the business is going, and what are the metrics, what are the tangible things that help you with getting that feeling of comfort or discomfort, and therefore the need to intervene or take action.
Yeah, so I've been blessed that most of the business that I have has been inbound referrals. But you come to a point where inbound referrals have limited our growth, and so we're now doing an outbound marketing strategy.
And how are you going about what are you doing?
So we've engaged a marketing consultant, and she's doing a 3-stage piece of work. And in fact, this afternoon, we've got her kind of conclusions and recommendations on this is how we're going to go to market. But basically, the key things we're doing, as I said, we have this proprietary index, the Funding Fitness Index on our website. That's one of the routes to market that we're going to do. It's free to use. Everybody gets a 20-page customized report and can book a one-to-one call with me.
As you mentioned, yeah.
So that's going to be one route to market, and we'll obviously be pushing people to that. Because of the work I've been doing with female founders over the last 5 years, I have a fairly substantial database of female founders, and so I'm.
Why did you go? Because I guess it's a side interest. Alongside the add then multiply, which, as you say, is a running business, but this is something that you're very passionate.
Yes, so this is a social enterprise. So, in the summer of 2019, just after the book came out, I had been speaking at an event in Reading,
of all places,
and about fundraising for SME businesses. And after my talk, a woman came up to me and asked why so little funding went to female founders. And I looked at her and I said, I have no idea, but I'll find out. And about a week later, I was in a meeting with the chief executive of the British Business Bank. Right. She and I had met at a function, and this was a follow-up meeting. And towards the end of our conversation, I thought I'd just ask her, did she know anything about this? And she smiled and reached down to the bottom drawer of her desk and brought out a bound research report that the bank had published like 3 months previously, called UK VC and Female Founders. And they looked at every VC deal in the UK in 2017 and found that less than a penny of every pound went to all female teams. Less than 10p went to mixed gender teams.
All female teams, I guess is the one question.
Sure. So all female teams submitted 5% of pitch decks and got less than 1% of money. Mixed gender teams submitted 20% of pitch decks and got 10% of money, and all male teams submitted 75% of decks and got 89% of money. Yeah. So that was just the beginning. And so we held an event. I reached out to a friend of mine at the stock exchange. I remembered from my PLC days that they had a nice theater, and I knew that Claire was working in their team that was focusing, because the stock exchange has done tremendous work over the last 25 years to get more women on boards. Their initial target was women on all FTSE 100s. There are now women on all FTSE 350 boards, and it's trickling down. We still need more chief executive women, but there are a few. Lots of female CFOs on FTSE 100 companies.
Interesting evolution, because I guess that was historically very male-dominated space. But I guess I've seen that both in terms of the legal profession and the finance profession. Yep. There's a lot more. Maybe it's where that objective capability of people to shine through comes through, rather than some of the prejudices that prevent them from
Exactly. So we put on an event at the stock exchange. We had about 110 people, and it went down really, really well. And we thought, great, let's do a series of events in 2020. And then something else happened, and we all stayed at home.
Yes.
Yeah, I can't remember. And so we took it online, and we carried on doing it online in 2020 and in 2021. And by the middle of 2021, people were getting zoomed out. And our last conference that we did online, I think we had 13 people. And we just thought, okay, the market's telling us something. Let's put this on hold. And then the book came out in the summer of 2022. And one of my very dear friends and mentors invited me to lunch, a very nice lunch, and said, look, I've been watching what you're doing. I love the idea. Let's go raise a fund. And I thought, wow, let's. Yeah. So we spent 2 years putting everything in place. We had a PLC that was ready to be listed. We were in extended discussions with the FCA. Don't get me started on the FCA. Okay. The sooner this government can reduce the regulatory burden of the FCA, the better, because it's appalling. I understand why they have protections, but we've just become over-regulated. But I'll jump off my hobby horse. And so anyway, so we had it all set up, and we launched our marketing. the week after Putin invaded the Ukraine. And we were marketing to big names. I mean, we were going to be a listed company. We were marketing to Fidelity and Schroders and Bank of New York Mellon.
What were you anticipating to raise in terms of the fund?
We were targeting 100 million.
100 million.
100 million.
And what was the story behind that in terms of how many female founders you'd be supporting?
Yeah, so we were taking the view that we would be more at the private equity end than the venture capital end. We wouldn't necessarily take a majority, but we would certainly take a sizable minority. And we were looking at companies that we could take from anywhere. The smallest would be £1 million plus in turnover, so they've got a proven product market fit, and we would take them from £1 million to £10 million or £100 million. And within our portfolio that we had, there were 2 companies that we said, these could be IPO candidates within the next 2 years. We will take them through the process to get the IPO. Yeah. So we were positioning that, there was real money to be made for investors.
So what happened?
Nobody wrote a check.
Why?
I think the biggest reason was that whilst members of my board, so I had a board, it was myself and my mentor, and then we had a high-profile lady as our non-exec chair, and we had 3 other female non-execs. Part of the challenge was we had never worked together before. I was the common thread for everyone. Many of them didn't know each other. So we didn't have a track record. Even though individually each of us could present a track record, the investors just said, nah. And the other thing is, I think just they don't understand the market opportunity.
So was it, you said it was 2022.
Yeah.
It was after the invasion of Ukraine.
After the invasion of Ukraine, after the tech meltdown, after the crypto meltdown, in the middle of the Liz Truss business. So the market was a bad time.
I mean, the market was indeed a bad time because, I mean, we support lots of people, both in terms of getting funding and in terms of managing their equity thereafter.
Yep.
And the switch that we saw coming out of COVID, the massive amounts of funds.
Oh, there was a wall of money.
A wall of money coming out 2021.
Yes.
Front end of 2022. Second half 2022 was a big change.
Absolutely.
And it's probably continued. I think the taps may be opening up a little bit now, but they're certainly more discerning, whereas before it was literally just throwing money.
I've got to jump in.
Into it?
I've got to jump in with one quick statistic. In that wall of money in 2021, according to Pitch Book data, more than 100 billion euros was invested in the UK and Europe. The share that went to female teams fell.
Below that 1% that you're talking
about? At that stage, it was higher. The 1% was 2017 British Business Bank. It had previously been close to 2. It's been tracked back till 2008. In 2008, it was 2.4. It's never broken through 2 since. In America, it's never broken through 3. But anyway, that was a digression. Let's get back to it.
It is a digression, so let's come back to it. So would you contemplate, or have you felt that you've tried this one enough? Would you contemplate going back to the market and trying to pick this up again? Because I think the intention that you have still has a big need. What I'm seeing is still, I don't have the stats to be able to put on the table, but there are a lot fewer female founders or leaders in the businesses that are on vested. And we've got a few thousand businesses on the platform now. I mean, very few are female-led, so there's that need is there. Do you feel that the opportunity might reopen its eyes, as it were? I'm
actually working right now on the next iteration of the opportunity.
Tell me more.
So what I'm going to do, and it's really interesting, I've run the 2 businesses separately, but intertwined for 5 years now, and I have a new coach that I started working with in June of last year. And if any of your listeners are serious about unblocking and moving forward, get a coach. Get a good coach. If you want a recommendation, reach out to me. And my coach has been questioning me about, the only thing that ties these 2 together is you, and that's not going to work from a business perspective. So how are you going to make this into something? So my plan is that I am going to create a new holding company, probably a PLC, but not yet listed, but with an intention that one day it will.
Why are you going to start with a PLC in your mind rather than starting, as many people do, with a straightforward limited company and then building from there?
As Stephen Covey said, begin with the end in mind. The only difference about creating a PLC is that you can't start it with £1. You have to put in 50 grand, and there's a lot more compliance. But
absolutely,
I have a team of people who do financial compliance for companies, so we can deal with it.
Yeah.
People often say, "Oh, I couldn't be a public company. The reporting burden is so onerous." Have you ever been in a situation where you're owned by private equity? In my last PLC, the one that I came to hate and left, we were a listed company, but we were 51% owned by 3 private equity houses. They were all over us.
Yeah.
You know, the market, we had to report things twice a year, and if there was news, we had to report it.
Yeah, I think the notion that if you have private investment, that somehow you have an easier life, I think is a bit of a fallacy. And I think increasingly it's becoming well known that, when money's involved, people are watching over your shoulder and they want to hear what's going on.
Absolutely.
Very, very frequently.
Exactly. So we're going to, as Stephen Covey said, begin with the end in mind. We're going to create it with a PLC because one day we intend to list it. We don't have to, so if it doesn't work out, that's cool. And then I am going to fold my 2 companies and all of my IP into that business. So I am now going all into this one vehicle.
Right. What in the back of your mind has told you that this is the time then? Is it just what we were talking about, the macro environment, the floodgates opening, well, not floodgates, but the financial markets opening up again?
All of the above. I took a week off between Christmas and New Year's, and I was actually off as opposed to working, but not telling people. But I still spent a lot of time thinking, and I spent a lot of time meditating, and this came to me, and I just thought, yeah, this is it. This is what I've got to do. So I'm going to create a holding company, fold all of my stuff into it. I'm going to raise some cash. I'm targeting an initial raise of £1 million, and then I'm going to go out and acquire 5 to 7 female-founded businesses where I use a little bit of the cash, but mostly shares in the holding company to do the acquisition. A little bit of cash just lets them take something off the table, have a nice holiday, whatever. Yeah. And I'm going to allocate a chunk of that money to spend on technology so that we can bring all 5 to 7 businesses plus mine up to speed technologically with modern AI tools, agents, all of that stuff. I'm learning more and more about AI. I'm by no means an expert, but I know a lot of people who know a lot about it.
Yeah.
And so the idea is to create this as a group of companies, run it for probably a couple of years, optimize it, make sure, so put my finance teams in to just overhaul and run all of the finance departments, and then just look at everything that's in the business and design it so that it can work as a whole. So let's say I buy 5 businesses and they've each got a list of 10,000 target customers. Yeah. So it's a list of 50,000. Well, let's say there's 10,000 overlaps. That gives me 40,000. So each of those 5 businesses now has 30,000 new potential customers that they can reach.
Interesting approach. But tell me, beyond the meditation and the thinking about this, and clearly having created a picture of it in your own mind and obviously for some others, how are you finding the support for this? Have you had, you said you're going to start off with a million. Have you been able to gauge the interest around the concept
from investors?
From investors,
from people who are going to write the check.
Writing checks,
absolutely, because everything else is easy. It's not easy, but in comparison,
ideas are ideas.
Yeah,
game plans are game plans.
Execution, but getting cash,
and making it happen.
So my plan is to raise half of it, 500K, from people who I know who have exited businesses before.
Right.
Some of whom I have advised on the exit. So I know how much money they have. And I have had conversations with a few of them, and they've said, sounds interesting. When you're ready and you have a deck, I will take a look at it. Don't bother me until then. I've got other things to do, which is entirely correct.
Fine. I mean, if you've helped them make a chunk of cash and they're up for EIS investing, because that's what you're going to need at that scale.
Part of it can be EIS. Part of it won't qualify for EIS because if I'm buying companies, many years ago when I was at my first listed company, we raised EIS money and used it to buy companies. That loophole has been closed. You can only raise SEIS and EIS money for things that are truly risk ventures. And going out and buying an existing company isn't deemed to be a risk venture.
So using
but for the
cash,
tech spend, that should qualify. I'm going to need to. I know some very clever accountants. I'm sure we'll be able to figure out how to make that work.
I'm sure you can structure this accordingly, David. You've got the experience and the relevant nous for this. So I'm sure it's something that you can get some form of government support for. And I think EIS might be an option, but I'll leave it to you, young man.
Thank you. And so the plan then, and in terms of the metrics, by having my team go in and just go through the financials, make sure everything's up, on track. I'm not suggesting anything isn't, but let's get everything up to a proper standard that is going to be audited in a couple of years' time. And then I'm going to come in and I'll get a reputable firm, like a top 10 accounting firm to come. It won't be a PwC, but
employers.
Well, maybe not PwC. They might be a little bit too expensive for the first one, but we'll aim to get them. But there's a bunch of good accountants. Get a recognized name to audit the accounts and then take it out to the private equity industry and say, right, this is what we've done. Here's our baseline where we started. Here's audited accounts that prove what we've built. We're now looking for 10 million and we're going to scale this and do that for 3 to 5 years and then go back to the market and say, now we're looking for 100 million. Because going for 100 million initially was a little bit too big.
Vested is the best rated ShareTech platform. What does that mean? It means that we make share schemes a dream. And over 90% of our customers agree that their scheme has helped them to retain, recruit, and to lead and succeed. Because companies that share stakes share success. So get them invested by giving a slice of the pie. For more info, search Vested.
Without the second need.
Going back to what you were saying, you set it up with where you want it to, or you construct it in a way that it can get to where you want it to be.
Exactly.
But going for the end goal on day one may well be.
Well, that's one of the lessons I learned.
Indeed. And so, at what stage are you now in terms of the consolidation? You've done the thinking. Have you started in terms of setting up the new company?
So my lawyer, I had dinner with my lawyer, who's a very good friend who I've been working with for 20 years. We've done a lot of deals together. I had dinner with him. There are a couple of potential regulatory issues. And I've left him with the brief of finding let's explore the art of what's possible rather than here's the regulatory restriction. Let's find a solution because there has to be one. So that's with him. I am having a meeting with a very dear friend of mine who I worked with at the PR agency, which was the first of the 3 companies. She left and set up a new business and now employs 400 people. I'm in discussions with her about becoming the non-executive chair. And then I've got, I could go back to all of the board members of the what was going to be the listed vehicle.
Original.
I've got a very good network of female founders. Basically, I'm going to be the only male in anything senior. So I'll be the only man on the board. There might be men in the executive team, but the idea is that we would have, when we bring the companies together, the managing directors, founders, sellers, whatever, they will all participate in whatever is the top executive board.
So here's a question. This is slightly off piece, but relevant. So you'll be the only man on the board. Are you going to be the chair?
No.
Good.
No.
Who will be the chair?
I'll be the group chief executive. The chair, hopefully, will be this woman who I used to work with 25 years ago.
And then when it comes to all these people that, you've got this great network of people, you're going to have loads of people helping you even at this stage. Are you going to be using cash to bring them into the game, or will they all have a stake in the business as well? So
they'll have both. So the kind of rough principle, and again, I'm discussing this, the current thinking, it's not the final offer, but the current thinking is out of the £1 million, we reserve, let's say 600 for acquisitions. And the idea is that we will give 10% of the purchase price up to a cap of 100 grand. So if it's worth $1 million, they'll get a 100 grand in cash. If it's worth less than $1 million, they'll get a represented adjustment of it.
Portion, yeah.
So let's say that's going to be 500 or 600, because I'm going to focus on mainly larger companies to get this going properly. And then the remaining 400 will be allocated to spend on building technology, creating systems, putting the plumbing in that works at a very solid level across all of the companies. And then letting the businesses get on and run.
So how are you going to find all these female founder businesses?
There's no shortage of them.
There's no shortage, but is there somewhere that you have a high propensity of success in finding, or how are you
Well, I've got a database of 2,000 female-founded businesses in, I think, 68 countries around the world.
Okay, so this is not just a UK.
This is a
global game.
It might start out as a UK initiative first and foremost, because I don't want to be spending shareholders' money jetting off to other places when I can build the foundation here. When we raise the 10 million from private equity, we'll start doing the jetting around and all that. So I got an email recently from a guy who was trying to sell me a private jet membership. I said, reach out to me again in a year.
Okay, well, that's quite ambitious. A year from now, you'll be at the 10 million raise. So
who knows?
The 1 million raise is going to kick off when?
The 1 million raise, Okay, I'm going to go public on this. I've not said this, but it's good because it sets a deadline for me too. The £1 million raise will be live by the 31st of March.
Okay, month and a half. And that will be for...
That will be for 1 million...
angel-type investors?
That will be for angel-type investors. So like I said, I'm targeting through my own network to try and get cornerstones, if you will, for half of it, and then open the rest to a wider...
And the marketing plan that you talked about earlier, when's that going to be delivered?
For the Add Then Multiply business, the marketing plan...
But you said that both these are being rolled in together.
Both these are being rolled in together. So
presumably that's going to be part of what you're going to the market with. It absolutely
will be. It absolutely will be, because I've got to justify that my business is worth what I want from it. I can't just go and say, well, I'll put my business in and it's worth 100 million. Now give me $1 million, Yeah. So my view on that is that my business and my IP together today are worth £1 million, but my execution of what I'm doing is also of value. And so what we're looking at doing, and my lawyer is sorting out the detail on this, is creating probably a preference share that allows me, when the business has a market cap of 25 million, allows me to convert the preference share into ordinary common shares, such that I own 10% of the group at that point in time. So that means my uplift is to 2.5 million.
Right.
And then beyond that, I grow with everyone.
So the pref share loses its preference.
It loses its preference at the point when the company's worth 25 mil. But if the company's growing beyond that, then I want a smaller slice of the growing pie.
Absolutely, and that's the way to do it. So what are you most excited about above and beyond this coming off? In a month and a half, that's pretty fast-paced work that you're going to have to get after over the next
The thinking is advanced, and as long as the chair agrees, that's kind of the last really important piece, because if she agrees, then, and subject to the advice from my lawyer, and one of the options, by the way, might be to set up in Luxembourg.
And why would you do that?
If the regulatory stuff can't be gotten round, Luxembourg is a little less heavy-handed than the FCA, I am told. I've never done anything in Luxembourg. I've never been to Luxembourg, so I don't mind if I have to go.
Will you be able to raise in London?
I can raise money in London through a vehicle that is registered in Luxembourg, absolutely. Right. There's no issue with that. That might impact on the EIS capability of it.
But it depends on the investors.
But again, it depends on the investors, and bear in mind, in mind, I am looking to acquire established businesses. I'm not going out and investing in startups where, 10% of them are going to fail and 85% of them are going to...
When you say established businesses, what's the definition of an established business from your perspective?
So the size can be variable. In an ideal world, I'm looking for companies that have a valuation of £1 million or more. So they'll have...
I think a lot of people would probably still class that as startups.
Okay, fine, but it's not pre-revenue startups unless they're very scientific and they've got massive IP.
Yeah.
I mean, one of the companies that was in our portfolio that we thought was within a couple of years of IPO was a biotech business in Switzerland, a fantastic company. And I mean, they'd had no revenue because of regulatory restrictions, but they'd already had 50 million invested in them. So they would have had a much higher valuation, but we were going to go in big with them. We were going to put in like 20 million to have a sizable stake and drive them to IPO. But again, I digress. Sorry.
No, so that's the sort of way in which you're going to gauge the size of these businesses.
So in reality, I would say I'm looking at businesses. The smallest will probably have turnover of 250K. It might be a personal services business where it's one founder and a little bit of administrative support, but that fits well with the rest of the group. I mean, I'm looking at coaching businesses. I'm looking at wealth management businesses. I've got a tax business that wants to join. I've got 2 coaching businesses that want to join. I've got a wealth management company that I'm talking to.
That's really interesting. But some of these, certainly coaching businesses, unless you go for a franchise type model, they're very difficult to scale because they're around the individuals and the service provided. Because again, a lot of these seem like more human service, and scalability is a lot more challenging.
They are human service businesses, but I am going to put technology on top of them and in them so that they will be much more tech driven than they otherwise might have been. And the founders on their own didn't or wouldn't invest the cash that was needed to do that. I'm changing that game by creating this structure and raising this capital and specifically earmarking a significant chunk to invest in technology. I'm not a tech expert, but I've got lots of people that I'll bring in.
Absolutely, and with the right technology, with the right AI, you can actually have a handful of people create quite scalable businesses.
Absolutely. And the AI industry is going through a major shakeup right now. It
is, and it's becoming even more accessible. I mean, it was ridiculously accessible.
Oh, it was.
Even up until a few months ago, and now it's being totally transformed yet again.
When DeepSeek launched, the market cap loss of NVIDIA shares was more than the market cap of the entire FTSE 100.
I know. That's quite something.
Yeah.
So what's next for David? Beyond the business, and I think that's going to obviously consume a lot of your life over the next year or two from what you're saying. So you mentioned earlier about meditation. How are you going to give yourself the headspace, the thinking as a human?
Yeah, no, great question. So the piece came out in the Telegraph, and then it went out on my LinkedIn, and it went out to my email database, and I've had some wonderful feedback on it. And I woke up this morning, and I was walking to the tube, and I just had this realization that all of the burdens of the past are now in the public domain, and I'm free from them, so I don't need to consume myself with what happened in the past. And that, I'm still kind of getting up to speed with that feeling.
That was a realization
It was a realization this morning. This morning. Yeah. And then I get a couple of inspirational emails. I probably get a half a dozen inspirational emails. 2 in particular were absolutely relevant to the way I was feeling. And I'm just thinking, okay, I've done something right here. The universe is aligning. Let's keep going. Let's keep moving forward. I no longer need to worry about the past. I acknowledge my past. There's no shame in it. There's pride in it from what I've learned. And there's great knowledge. It's a database for me, but I don't have to spend my time worrying about the past anymore. I'm now focused on the now and the future.
Excellent. Well, here's to the future, David. Good luck.
Thank you.
And I will be following you as you walk this new journey.
Wonderful.
Thank you for joining us on this episode of FounderMetrics. Remember, even the biggest of ambitions are completely doable when you know what to manage and track. If you enjoyed this episode, be sure to subscribe and you'll never miss another one. You can visit us on www.vested.com, where you'll find piles of additional resources, articles and exclusive content. You can also join our thriving community of entrepreneurs and founders by following us on the usual socials and YouTube. Until next time, stay inspired, stay driven and keep writing your own success story.